Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, on to the show.
All right. Good morning, guys. Welcome back. Sorry for the slow start there. I think my editor / producers are just a little bit late today. Maybe that super long stream we did yesterday wore them out and they're sleeping still or something. I don't know. Anyways, hope you guys are doing well. Today, we have got the follow-up to yesterday's CPI. Of course, yesterday's number was the big one of the week, the Consumer Price Index. However, let me just reiterate how important the Producer Price Index also is. We got 472 people here as we start out the stream. I'm running the ship solo right now, meaning the stream usually has, several people involved, but I'm here solo so far. Would you guys do me a favor? I'm doing all the little background stuff. Can you guys help me by hitting the thumbs up button on the stream? Just let me know you're in the building. Let me know where you guys are tuning in from too in the comments section, in the chat section here. Good morning, good afternoon, wherever you are in the world. The S&P 500 has been continuing its sell-off here. You can see we are down 0.42% before the market opens, or the U.S. stock market opens, that is. At the same time, you got gold kind of wobbly up here. You got oil back and forth. And the dollar is coming back swinging this morning. So, wow, good to see that volatility is still in the air. The VIX is up 5.57%. Keep that on your radar here, guys, as we start off. And the S&P 500 down 0.4% before PPI. Sure, we don't know what the number is going to be because if PPI comes in cooler than expected today, we might see it actually reverse some of the damage that was done yesterday. But if that PPI number confirms what we saw yesterday, inflation is sticky and problematic, guys, go ahead and tighten up your belt a little bit because nobody wants their pants ripped off by how scary this thing could be. Because if you get inflation problems, both on the consumer price index and the producer price index, then you can bet your bottom dollar that PCE, the Fed's preferred measurement of inflation, is also going to be problematic. Because, of course, a lot of the components that are in the PCE number are prevalent also in the CPI and PPI. If you haven't looked these things up, if you don't know the difference between CPI and PPI and PCE, these acronyms that I'm saying, they're all very important. They're very key stuff. Anyways, today we get that number in just about 5 minutes or so. I've got my coffee. I hope you guys do as well. I'm going to take a sip of it, and I apologize if you can hear me slurping. I've been informed that it's a terrible sound when you guys can hear me like swallowing. So I try not to do it, but sometimes it happens anyways. With that said, guys, what are we expecting? Let me know real quick as we get started. First of all, hello to the Philippines, Kenya, New Zealand, all over the place. Please invite Kathy Lean as a guest. We are in the works, believe it or not. Kathy and I are friends. Same with Boris and I from BK Traders. Both of those guys are great. So we might have them on the show at some point. Anyways, today we have the dollar on the move. Dollar's up. The euro is selling off here again following yesterday's sell-off. Dollar yen flat on the day. Dollar Swiss slightly down on the day. Dollar CAD, Aussie dollar. Seems like a good old-fashioned bit of a risk-off sentiment here this morning so far. Let's go ahead and switch over to our singular market view for a moment. Give you guys an update on current positions for me. I am still in the oil trade, no longer in the gold trade. I know some of you guys might have missed it yesterday, but I did get stopped out officially of my gold trade after about a month and a half, which was a very long time for me to hold a single trade, but it just kept ripping, so we kept trailing stops. Oil, I'm still in this one since late March. But I'm in this trade. Stop loss has been trailed. We've got to stop just below yesterday's structure low. That wick down basically set up a very nice spot for me to go ahead and trail my position. Here is the USO. Let's get a P&L check. P&L 11,450 on the trade so far. We'll continue to hold that one. Other than that, I have several options plays that are going on. I would like to see the S&P 500, to be honest. I'd like to see it continue to come down. It would allow me to potentially get assigned on some shares that I'd like to own. So regardless, though, here's the thing. If you're watching indices this morning, it's a tough one to try and call a breakout here, because you're talking about a roaring uptrend that's also hitting a key level of support. Now, I've already exposed my preference. I would like the S&P 500 to break lower and to trend for a little bit to the downside. I think it would give me a great opportunity to sell some puts, make some money on the wheel strategy side of things that I do. But also, I think it's probably just a healthy thing for this bull market to have a 5 to 10% correction. 5% correction would bring us down, by the way, guys, to about 5,000 on the S&P 500, the SPX. And I think that that's healthy. We'll see if it happens. I'm not saying that that's what I think is going to happen. I'm just telling you what I would like to happen. That being said, what I think will happen is the bulls are going to continue to contest this area. But if you do see a break of this structure on PPI this morning, which comes out in just over 2 minutes, I'm going to say this. I think if you get a break solidly under there and you sell and close under there today, it's probably a pretty good chance the S&P 500's uptrend has been beaten down for a bit, and we might actually see a little bit of a reversal for the time being on the stock indices. Let's take a quick look at the NASDAQ while we're on the topic. Here's your daily chart. Also, let me, so after long and hard thought, I decided that I'm going to go back to extending right the support zones that I use. This is a little thing, but this little thing where I'm like constantly dragging them to the right is getting really frustrating. So I am just going back to extending right, and I feel like I'm back at home. I used to do this forever I'm talking about my chart settings, right? These zones of support, you can make them extend right, and that's what I've done. Anyways, so the NASDAQ, same kind of story. You've got this level here. Your level of support for bulls is around 17,800. That's the line in the sand, I think. Yesterday, you kind of got close to it, but we didn't even, break past those lows. So today, if you get hot PPI, there's a good chance, in my view, that we probably break these lows. Now, that's if we get hot PPI. If we don't get hot PPI, then the right for this market to reverse is probably there, right? There's a good solid stake that if you get cooler than expected PPI, the NASDAQ could continue to rebound and continue to just trade sideways, because then you're left with conflicting inflation data, not just roaring hot inflation data. The risk here today is that you get a hot PPI following what was a hot CPI. If you get both of these, I think the stock market in the short term is going to have some trouble. And that goes for the same thing for gold, guys. Gold will also struggle here if you do get hot PPI. Yesterday, CPI brought gold down short term. Now we wait for PPI, and let's see if it confirms the inflation narrative. So watch gold closely. That's probably what's going to move it the most here today. We're about 30 seconds out from the number, guys. I'm going to switch back over to my full screen here so that we can see all charts together. So heads up, if you're new to the streams, we got your indices over here. The dollar index, the euro, the pound. You also have gold and you have oil. So whatever you watch, I've got on the screen for you. We got our breaking news coming in right now. Okay, guys, and we are seconds away here. Let's see what we get out of the producer price index. There's 1,000 people watching. Thank you for hanging out with me. Let's see what PPI's got for us today. All right. Initial burst here to the downside for the dollar index. Euro's slightly up. Let's see what those numbers brought for us. So unemployment claims were slightly better than expected. Core PPI came in line, and PPI month over month came in lower than expected. Okay, so what does that tell you? That tells you a little bit of conflicting data from yesterday's CPI. So, of course, of the two of them, CPI is the one that moves the market more. But that being said, this number maybe it restores a little bit of faith for the the SPX bulls, right? Because if you are going to now see inflation coming in hot from PPI, slightly cooler from, hot from CPI, slightly cooler from PPI, well, you got a story there where it's inflationary still. But you also saw last week another inflationary gauge was that wage growth was not terribly hot. So you're getting some mixed signals. CPI being the big one, that was hotter than expected. Still, that's going to probably take the bulk, the lion's share of the move, but PPI bouncing back just slightly here. Gold market is slightly up on the 1 hour chart. I'm sorry, on like the lower time frames, but on the hourly chart, just barely negative. Switch back over to our singular market view here. Here's the oil trade continuing to stay strong there. The S&P 500 again was down nearly 0.5%. Now just bounced back off of this. Let's see if it finds support. If you're watching the 4 hour chart, 5138, about where we found a bit of a bounce. But again, keep an eye on this one. NASDAQ also just slightly in the green now on the day. The Dow Jones is really close to struggling at this level. In fact, let me go to the daily chart for a second. So daily chart for the Dow is in dangerous territory, I'd say. You're very, very close to getting something like this breaking out. So if you're watching the Dow Jones, the US 30, keep an eye on how this candle closes today. If it closes just like this, then that's perhaps promising for bulls. Maybe you get a little bit more of a, you get that pin bar style candle looking thing where there's rejection on the bottom side. That could be positive in the short term for the Dow. But that being said, if you get a closure outside of the low here for the Dow Jones, that could signal there's some weakness coming there. NASDAQ, not quite near its lows, holding up a little bit better than the other two even. And here's the S&P 500. Again, same story for the Dow. If you get some wicks off the bottom here, you're looking okay going into Friday's trading. But again, it's very early in the daily candle, so we'll see how that goes. The VIX is up 11%. What's going on here, guys? That's a huge spike in the VIX here this morning. The Russell rebounded here despite being down 0.75% this morning. This is interesting to me, though. Why is the VIX up to 17.61? That's crazy. Gold also bouncing back just slightly here on the day. Here's your 30-minute chart view. Seems to be rounding out around, at least trying to hold 23.30. Remember, guys, I'm no longer in gold longs. I stopped out, or I trailed out for profit. Ended up closing that trade yesterday for about 18.5K, which is one of my biggest trades ever. The bigger one that I can think of off the top of my head is the S&P trade from last November. That was the biggest trade I ever took, which was like 44K, which was the biggest I've ever had. Anyways, question on gold is, I'm getting these questions a lot, is like, is it time to get back into gold? Like, where do you get back into gold? And for me, the answer is not yet. I don't have anything on my radar here. This is quite literally my top setups radar here. Gold is still a neutral reading. So, for those of you guys who are gold traders and you have your reasons, by all means, do your thing. But for me, I'd like to see confirmation on the fundamental side. Why is gold not super bullish on the fundamental side? Well, I'll show you guys. Let's break it down just briefly here on the EDGEFINDER, okay? So the EDGEFINDER currently has, in terms of its readings here, you've got some mixed signals. So when we look at the manufacturing PMI numbers, they were really strong. That's not great for gold because, again, strong economic reads usually not a great thing for gold. You usually want to see weakening economic reads at the same time that you want to see elevated inflation. That's the sweet spot for gold. Right now, what we see some strong economic data to some degree. Manufacturing PMIs, you see GDP relative to forecast was up. So that's, of course, not great for gold. Services PMI was less than expected. That is good for gold. Retail sales numbers, right? So the consumer spending, not great for gold. Inflation was good for gold. It's been hotter than expected. But again, this signal is nullified if economic reads are also strong. Hopefully that makes sense to the fundamentalists out there who are trying to understand this stuff a little bit better. Yields are also on the rise, not great for gold, right? These are all of the factors that contribute to the scoring of the edge finder. This is why you don't see me taking trades unless the edge finder is giving me a confirmation, because I'm looking for the fundamentals to align with the technicals. That's my key to take trades. If I don't have both, I don't touch it. COT, however, does look good. You've got a heavy demand from institutional money on the long side, so we can see that there for sure. Retail is about mixed on gold. Seasonally, this is a good time to buy gold. So the point is, though, we have too many conflicting factors. That's why we get a neutral reading. Does that make sense? If that made sense really quick, do me a favor, guys. Just type yes in the chat. That way I know that I can move on from this subject. But I just wanted to go through some data really quick with you on why I'm not entering gold again right now. And I should mention, here's another key factor. Jobs last Friday were really strong. That's not great for gold, right? Strong jobs, that's economic strength. Economic strength, not great for gold. Okay, we get that. Inflation, though, hotter than expected, is kind of a good thing for gold in some ways, and it's not a great thing in other ways. So in inflation, right? Although you can see it gets a net zero score here. Although it's positive, the issue with inflation being this high is it's also increasing inflation amidst strong economic data. That's where the concern is, because what that tells you is if you have high inflation, you might say, well, commodities, gold should shoot up. The problem, you got to hold your horses for a second, is because if you have a strong economy, the Fed can also look to keep monetary policy restrictive, which means slow the supply of dollars, make dollars more strong relative to the price of gold. What does that do to the price of gold? Down. I hope that made sense. If you need to rewatch that, just back up the stream a few times and you can listen to that breakdown a little bit. I know it can be a lot, especially if you're new to fundamentals. Let's have a little bit of an after party look at the S&P here. S&P 500 on the hourly chart, shooting back up here just slightly at the top of this range. Again, I think if you're a day trader watching the S&P, you've got this level of resistance here. So let's do this. Let's just do this. Support here, right? You've got resistance here. Let's see if it can break out one way or the other. It's very close to the top of this range. You had a couple times where it wicked above this area and rejected. Let's see if it can hold its own there. We'll keep an eye on that. Yeah. So top of this range, 5170. Low of this range is like 5140. So that's where we'll continue to watch the S&P. Same thing with NASDAQ. NASDAQ actually breaking out. NASDAQ back into the 18,000s here. Again, market's going to like that. Inflation was hot with PPI. They're not going to like that. CPI, but with the producer price index that came out this morning, looking a little bit better than expected in terms of inflation. The Edge Finder didn't help this time. I'm not sure what you mean. The Edge Finder does not predict what news is going to be. The Edge Finder takes into account what news is, factors it into its bullish and bearish readings. So pretty soon, as we've got all this inflation data coming in, that will be computed into the system here. Currently, in terms of setups, dollar, yen, oil, USD CAD. Actually, I want to look at USD CHF. This is a trade that I'm in. It might have pulled back on me. It might even, oh, yep, I got trailed out. Officially trailed out for this trade. I'm going to actually update that for members really quick while I'm thinking about it. Okay. Out of dollar Swiss, I entered this trade a couple days back and just took a small win on it. PPI coming out this morning, of course, not great for my trade, but we caught this before CPI. Fundamentals were leaning bullish on the Edge Finder. I went long over here, popped on CPI, trailed a stop, and now with this bit of a reversal that we're seeing, I went ahead and closed profits on it. So we'll take it. Not obviously nothing crazy, no crazy wins there. That's only, let's see, what is that? Like 50 pips, which is, for dollar Swiss is not bad, but not a huge win, not a loss, and we'll take it. In terms of current setups, let's see what else we've got. Dollar yen. Dollar yen might be interesting. Look at this. We broke clean through that 152. We are far away now from getting back in on this, I think. I'd like to see a pullback on this one, but bit of a ways away. So dollar yen did officially break out of 151.5, which was that key level of resistance. Here's the euro. Euro continues to look weak here this morning, despite the news. ECB press conference is coming in soon. This is going to be probably pretty big to the market as well. Another big one is the 30-year bond auction today. Lots of stuff happening today. There's 1,075 people here watching. If you guys would do me a big favor, hit that thumbs up button on the stream. Help us out. It helps to grow the show, and also suggests more of my content to you on YouTube. If you'd like more of this stuff, if this would be helpful to you in your future trading journey, consider subscribing, hitting the thumbs up button, all that good stuff. It just tells YouTube that you want to see more stuff. 6-hour stream again? Nah, it usually takes us several days to prep for those. Like we have to coordinate a ton of people's timings and fill out a whole schedule for the day. So unfortunately, no 6-hour stream today, but I'm sure you'll see another one someday. We have fun doing those. NASDAQ up 0.28% on the day. S&P up 0.14%. I mentioned that I sold several puts yesterday. So I sold puts on XLV. XLV is probably trading slightly up here on the morning. Let's see. Nope, about flat. So XLV hadn't done anything. XLK. This is another one that I have options on. Nice, up just slightly here this morning. VOO, I've sold puts at 460. So that is looking okay. Probably not going to get assigned. I would love to be assigned on them, but just not going to. It looks like it. Let's see what else we have. Bitcoin's up 0.5% today. Not too exciting there. TLT rallying back slightly on this news, of course. Yields coming down just slightly. Again, you can see, though, just how impactful CPI was relative to here's PPI, right? So CPI still very, very impactful. This is just early in the candle, though. This thing could continue to come down, and stocks would probably love if this came down. It seems like, as much as people would like to argue that this market is not pumped up on the idea of rate cuts, it is hard to deny that the market goes up every time there's news that suggests that rate cuts are coming, right? So I think a lot of people would say, oh, no, the market's, doesn't need rate cuts. It's not arguing for it. Well, look at the reaction every time you get interest rate cutting positive news. So we'll keep an eye on it. S&P 500 struggling here at 5170. Let's keep an eye on this level, guys. I think today will be really interesting. You've had so much economic data here come out. The question is, how does the dust settle? Because if you get a rejection here, that looks terrible, right? I'll tell you right now, if the S&P 500 closes today without being able to close above this level of resistance, that's a bearish signal, I would say. When you sell puts, it's nothing to do with currency trading. It's stock trading, basically. But when I sell puts, I am essentially, I'll show you. I'll try and keep it as simple as possible. Puts and calls, options are a little bit more complicated than just straight up just buying or selling a market. But the idea is essentially you are selling insurance if you're an option seller, and you are buying insurance, or you're buying a leveraged bet one way or the other when you're buying options. I tend to sell options. I don't usually buy them. And so what not to say that one is absolutely better than the other. If you are directionally biased, it can be great to buy options if you have the right setup. But for example, XLV, I'll just show you this one. This is a healthcare ETF. Several healthcare names that you would know and love are in this ETF, right? This basket of stocks, essentially. So what I've done is I've sold puts. That means that someone else out there wants to be bearish on this chart. They think it's coming down. And if they're right, I will basically cover the other side of their trade. Now, in return for covering the other side of their trade, essentially their commission goes to me. So I collect their commissions over and over. And most of the time, I don't deal with the trade because I'm selling them what is called out of the money, right? So I'm selling puts away from current price. If this market moves lower, then what will happen is I have to buy the shares at this price. This is the agreed upon strike price, but I also collect a premium for selling this put to someone. If you want more information, you can find it by looking up on YouTube. Here's the thing to look up: Wheel Strategy, Trader Nick, and you can learn my option strategy. It's very straightforward, very simple. The only thing is it does require pretty significant trading capital. So it's not for small trading accounts, I would say. Roberto, thank you very much. Appreciate that, man. The $20 or the 20 euro there, I very much appreciate that. Thank you so much for supporting the stream. That's awesome. That will go directly into, I don't know, a new headlamp or something in the office. That'd be awesome. Again, thank you very much for the donation. That's very kind of you. Just a beer. Thanks for your time. I appreciate it. Thank you so much. Anyways, S&P, continuing to watch how this reacts here. The NASDAQ slightly off of its highs here. Let me check on my oil trade. Oil, I'm still long. Again, P&L check is here. Up 10.8 on this trade now. Giving back a little bit of the gains on this one, but this one's been going a little sideways here recently, and it's kind of to be expected. We've got conflicting inflationary data. For my oil trade, I actually want inflation to be hot, because hot inflation means rising prices. Rising prices generally good for commodities. And I've been really bullish commodities this year, which has served me pretty well. I traded gold long, I'm trading still oil long and trying to manage a position here. So we'll continue to watch that. Also, real quick, guys, if you have not already heard, we are currently doing our once a year anniversary sale for the EDGEFINDER. It is currently 45% off. We are celebrating 2 years since we launched this product to market. When I say we, behind the scenes here at A1 Trading, I think there's 10 people total involved. 8 of us are in office here in Atlanta, Georgia, and a couple of us are remote. We build tools for traders. We've worked incredibly hard to bring this tool to market. It's been the ride of a lifetime for me. My background is in software engineering, so combining two of my great loves, building things and trading, it's a dream product for me in my own trading. I genuinely think every trader who aspires to be a fundamentalist should have a copy. It is a wonderful tool. And again, I don't say that just because I built it and I'm selling it. Although I am selling this tool, it is worth the money. I'm telling you right now. We've spent, in the several 6 figures to build it to where it is today. And you can currently get it at a copy at a huge discount, 45% off to anybody who shoots us a message using a link that's being dropped in the chat right now. If you send us a direct message, someone from my staff will get back to you and get you set up with a copy for a major, major discount. Again, this is what happens when you click the link, click chat now, click EDGEFINDER 45% off sale anniversary, and we will lock you in at that best price of the entire year. It is ending soon, so do not miss out on the discount. Again, chat link is right here. Take advantage and get yourself a copy if you've been thinking about it. With that said, guys, we're going to take a quick break, and then we're going to be joined back again by Miko, who came on yesterday, and we're going to see what he's got to say about all this aftermath of the craziness we've been seeing in markets the last 24 hours. So right back after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and there they both are, Miko and Marco. Didn't see Marco until just now, so I apologize for the intro, but how's it going, guys? Welcome back to the show.
Hello.
I haven't seen you guys in a long time. It feels like almost a whole day or so. But I hope you guys are doing well, and hope you survived all this chaos that we saw in the markets the last 24 hours. The dollar index jumped massively yesterday on the consumer price index, which came out hotter than expected. Today, however, we do see the follow-up, the producer price index, coming in slightly cooler than expected. I guess we'll do our standard routine now that we're back to normal. Marco, what are you watching here today? What's on the radar?
Sure. So for me, all of the pairs that I'm watching, so all 6 of them, actually had a really nice bearish push down. Unfortunately, it just could not continue, so I didn't get any high probability selling entries, so I didn't take any trades in the end. But Euro and US dollar possibly starting to form a descending structure, so I'm looking for a nice push up and then to buy. Euro Japanese yen looks pretty flat in this general area, so I'm being more patient, just looking for a large push up or down. Aussie US dollar looks interesting to me because it just broke this most recent high right here, so I may take a liquidity sweep entry, which is basically I identify a small or a large range, which is here. I look for a takeout of the high or the low, and then if the next candle closes bearish, I'll just enter on a sell setup with, let's say, 10 pips stop loss, aiming for a 3-to-1. But what I also like about it is that the overall trend is down. So this just may be sort of a liquidity takeout before we continue with the overall downtrend. I have seen it happen a lot of the time. So basically, there's a push down, and then this area is usually full of stop losses from people selling. Then they get taken out, and the price just continues with the overall direction. So that's my game plan on the Aussie and US dollar. All depends on how the next candle closes, red or blue. Aussie Japanese yen, I'm being more patient on this one, not seeing much direction, and I'm only trading the range bound entries, so the liquidity sweep on the Aussie and the US dollar. All of the other pairs, I'm still trading only the trending entries. Pound is not looking that good. I wanted to take a flag sell here, but I saw too much bullish pressure, as I'm seeing right now as well. So looking to see if the bearish pressure can continue down. And then I look for sell setups a bit lower. And the final one is going to be the New Zealand Japanese yen, which doesn't look promising either. So on the watch list, I'm going to put the Aussie US dollar and possibly the pound, because, again, this is major selling pressure. So if it does continue with the selling pressure, I would be interested to look for sell setups. All of the other pairs are just not giving me any trending entries and are just kind of slowing down in this general area. So that's the game plan. Aussie US dollar for the range bound entry and the pound possibly for a trending sell entry.
Okay, awesome. Yeah, I like how you broke that down by type of trade, not just that's one thing that I think is cool. Marco, you and I both kind of have that concept of having multiple strategies. I have 2 strategies that I've talked about. You've got 2 that you also talk about. I think that's really cool, and it adds a little bit of diversification, and also the possibility for more trades, which is both a good thing as long as you're sticking to a system that actually works overall, which is awesome. So same thing, Miko, in terms of your watch list here today. What's on the radar for you?
So yeah, I'm currently in a pound entity long position, which I entered as I was coming into your stream yesterday. Currently in a little bit of drawdown, but I'm looking to see if I can swing this one back to its highs. We've got a nice uptrend in the higher time frames, and I'm looking to anticipate that next higher low. So that is the position I'm in. I'm not currently in any other trades or anything looks really promising. I mean, I do like silver because it's still relatively quite bullish. It looks like it's slowing down. So I'm eyeing up some pullbacks on silver. I think this still has a lot of room to the upside for it. I like it a little bit more than gold. So I'm keeping a close eye on 27.3 and also 25.7. These are two levels which I would look to go long on. And by the way, my camera is at really low battery. So if the footage does cut out, I do apologize.
No problem.
But yeah, for silver, everything looks really, really bullish still. And I do think there's still some distance to cover back to 29, maybe 30 as well. So I'm looking at some pullbacks for silver. And I also do like the yen pairs, more in particular, CHF, JPY. Still looking relatively bullish on the higher time frames. Could be looking at another swing back to the high there, anticipating another higher low. So if we can break out of this consolidation, that would be really, really interesting. And then I'll be looking for some pullbacks and break and retest to long that to the upside as well. But in terms of the dollar pairs, I'm still kind of on the fence. I mean, DXY has been pretty bullish. We did take out a high over there. But I'm looking at Euro USD. It seems to be coming back into major support. So I don't really want to sell Euro USD at this point in time. Aussie dollar, kind of still a big range for me. So I'm not really keen to get involved with that one. Pound USD, likewise. It still looks like a big range to me. So all in all, dollar pairs are still a little bit for me. I need a little bit more development. Maybe we can see momentum for the rest of the week and things look better next week. But only a few pairs that have caught my eye so far.
Yeah, for sure. And it's, one of those things, I think when you get these big news weeks, it causes a lot of volatility, which can be great if it sets up clean charts. I think actually for me, I was looking at the dollar index. I'll show my screen here for a second. So dollar index, we're trying to get above this level of resistance. And I think if this closes, you could argue it kind of did close above this range. I was hoping it would close just a bit higher, just to really smash out the highs and just show, dollar strength is in. But regardless of that, I think that on some of the individual currency pairs, there might be some setups on the dollar that look kind of interesting. Just from my own perspective on how I trade, I'm using a combination of technicals and fundamentals. I think what I like for the story about the dollar is that, here you are, you have a hotter than expected consumer price index. So prices are rising. That's also a reflection of a relatively, strong consumer. So, from a fundamental perspective, inflation's hot. At the same time, jobs data came out really strong. And then if you look at its peers, Europe and the UK, in relation to the dollar, they're seeing their economies slow at a faster pace and inflation come down. And they may even be talking about, as we speak, the ECB might be talking about cutting rates sooner. So you combine all this story, and I think that there is a little bit of a picture of dollar dominance. You can also see a lot of that just in the price action against certain currencies. Dollar CAD really reflects that well. The Bank of Canada seems to be one of the ones that will probably cut rates first. And so there's the dollar CAD breaking clean through the highs. I like that story. I'll look for pullbacks on it. So just kind of cool to see some directional move finally happening, it seems like, on the dollar. But that being said, I would like to see it follow through, and we'll see how it plays out. I guess next topic, Marco, for you, I always got to put you on the spot about gold, and we'll come to Bitcoin after it. But gold, what are your thoughts? I saw yesterday when you were taking over the stream for a little bit, Marco, you had the same problem I do. Everybody just keeps asking about gold over and over and over. And so now I'm here to ask you about gold over and over. So what's up on the gold chart?
Sure. So yeah, people love gold. For me personally, again, a bit of a slowdown as I was talking yesterday. So on the 1 hour, I'm seeing definitely a major slowdown, but let's go up a time frame. Let's go to the 4 hour. Let's see. On the 4 hour, it's a bit of a better story. Again, what I'm mostly focusing on as a momentum trader is what happens when we break these highs. So here we're getting momentum, here momentum as well, momentum here as well. But then on the top, we're just starting to get some wicks, starting to get some weakness, and starting to get some selling pressure as well. So it looks like it's sort of slowing down. I mean, the legs are getting smaller and there's some selling pressure showing as well. So I would not be surprised if this retraces. Again, that's my knowledge from Forex. I'm not sure if it applies fully to gold because I haven't really backtested it, but that's something just that Forex pairs like to do. If I go to the daily is pretty much gonna explode more to the upside more. Okay, I'm not seeing any sort of weakness on the daily chart. So on the lower charts, I would say a bit of a pullback is imminent, a bit of pausing, maybe for a couple of days or weeks. But on the daily, I think this has a lot more room to go up. Still not showing any signs that it wants to slow down. So maybe we just get something like this. And then after a few weeks, we just continue. That's kind of my forecast for gold, because just this momentum, and it's on the daily, is so strong. The candles are nice, and the bearish candles are almost non-existent. Everything is telling me this wants to continue going up.
Yeah. Well, before we switch over to Miko on this, I wanted to, while you've got the screen, Marco, what about the S&P? With all of the news that we've had recently, it's been a tick up in volatility. The VIX jumped here this morning. The S&P 500 sold off heavily yesterday, trying to rebound today, but this one's really slowed down from I think I asked you about it a couple weeks ago, and it was trending a lot nicer. It's really changed its nature a little bit to be more indecisive, and I've been pointing out on the daily chart that we're trying here. I would love the S&P 500 to actually break lower. It would give me a chance to get filled on some options trades that I'm doing. That's more of my range bound trading style. So that being said, right now we're seeing big rejection off it, but I'm curious what your thoughts are with the S&P 500 as it currently stands.
Sure. So on the 4 hour, I know the S&P, I have seen it happen a lot of the time. It likes to trend in these channels. So basically, it likes to move in channels more correctively than, let's say, a classic Forex pair. But then again, just by gauging the momentum, this is not a good sign. I mean, we clearly broke out of this lower channel line and clearly got major selling pressure here, and here as well. These candles are absolutely massive. Yeah. So if we bump it up to the daily, it's not looking good either. I mean, you can paint a trend line like this. It's clearly broken it, and it's clearly showed some major rejections. So I would say this is now a major warning sign as well, just by gauging the pure momentum and this, how it moves sort of in a channel like formation, right? So not a good sign. I would be more patient.
Marco, before I pass it over to Miko, I think you should play around with looking at stocks or individual stocks or S&P at some time, just because the reason I mention that is that your style of basically trading within these big momentum pushes, like you're looking for very brief pullbacks. Sometimes in the stock world, that is just so effective. When markets are very positive, when they're optimistic, and you can catch big runners. I mean, if you had traded NVIDIA, for example, the risk to reward there would have just been incredible. Even if you joined late in the move, it's just been so, as long as you're willing to bail quickly on momentum. I'd be really curious to hear your thoughts if you played around with back testing on like individual stocks or just some of the indices. I'm very curious, but I got to get Miko in on this because I'm curious about his thoughts too. Miko, first gold. I know you kind of already talked about metals. So if you want to skip it, you can just jump to indices. But I'm curious either way, gold or S&P or both. What are your thoughts?
So yeah, very similar with Marco. I think there is still a lot of room to the upside. There's still a lot of momentum on the higher time frames, daily, weekly in particular. So I do think we're coming up to some, well, not necessarily areas, but in terms of the price action, there is obvious signs that we are becoming a little bit more fatigued. If you can compare it with price action over here versus over here, it's a lot more correct, a lot more choppy. So I do think a larger pullback will happen at some point. Same with silver as well. But I would be expecting price to find its feet sooner or later and continue higher. So I think higher prices are still to come. Yesterday, I was talking about pullbacks potentially to some of these areas here. I would like pullbacks there. Whether we would have a big enough pullback for that that'll be up to gold, but I do think there is still room to the upside. So still very bullish on gold, bullish on silver. In terms of the indices, S&P 500, again, similar price action, as in we're still very bullish, but showing some signs that we could be coming up to a large retracement. I'm not really seeing any opportunities to buy. Again, when I'm looking to buy, I'm looking for good levels of support resistance to buy from, and nothing is really popping out to me. And the fact that we are seeing a lot of rejections here and lower highs as well, it's not really a good sign. The trend is likely just to suddenly continue right now. If it does, and we start taking out structure again, that's great. It'll leave behind some nice levels of resistance turn support to buy from, like such. That could turn into some nice buy opportunities. But as of right now, kind of seeing corrective structure, which could just be a larger pullback. I anticipate to be a larger pullback and eventually, again, find our feet, continue higher. But I wouldn't look to try and force anything just yet. I think we could be going through some retracement. Maybe dollar strength will give us that for gold and the indices.
Yeah, for sure. Well, thank you guys both on that. I guess our last topic that we always have to hit is Bitcoin. It's doing its thing again. It's back up. I don't really use trend lines personally very much in my trading, but this trend line seems to just be so stubbornly holding for the bulls here. We're shy of the all-time highs, but we're back up to the top of this range around 71,500. You know, this chart, if it had to go anywhere, to me, it's going up, and it's, of course, could be completely wrong or something could change about it. But right now, as it stands, momentum is just so in favor of the bulls. You can see each time price does sell off, buyers step back in. And I don't know why, because I really am not a crypto Super Bowl, but all I'm doing here is I'm looking at the chart. And I listened to somebody talk about this on CNBC last night. On somebody said that they were continuing to hold their Bitcoin on CNBC, and somebody else said, like, why are you so convicted on this? And the guy's reaction was basically, it's a long bet on the marketing campaign of like BlackRock and all these big institutions that are getting in on Bitcoin. They're selling products related to it. He was basically making the point that it's a long position on their marketing, and that Bitcoin is just the vehicle. I thought that was a really interesting perspective, because it's like, yes, it's moving with a lot of momentum. That's one thing you could talk about, but also there's a lot of big money kind of backing it and becoming more involved in it. And, it's like, why do we assign value to gold? I mean, you could say that, we overvalue it massively just because people like to have jewelry. So, I don't know, but what do you guys think? I guess, Marco, first up, Bitcoin, is it going higher? Is it just range bound? What do you think?
So for Bitcoin, I just want to say I quickly glanced at NVIDIA, and one thing I can see is a lot of gaps. And something I like about Forex is that there are minimal gaps. So that's something I would need to get used to. But the trend is looking really nice, the overall uptrend that I saw. About Bitcoin, for me, fundamentally, it's kind of tough to analyze it because I really don't believe in it. I don't see much, let's say, value, except maybe sending money without the government knowing, which is
true,
which is a pretty big value. But like a legal value, I don't really see it. Just the technicals, for me, I would need to see a breakout, of course, out of the major high right there. So right now, anything that's happening in here, for me, according to my analysis style, is just range bound flat, very corrective. I would look maybe for this to like reject and then get in on a quick sell setup. That would be a range bound play for me. So just a pierce of the high, nice rejection candle. I get in with a smaller stop loss, aim for the, let's say, middle of this range. That would be a quick liquidity sweep trade for me. But for me to be let's say a buyer in this market, I would need to see price break the high and then also continue, preferably even on the daily. So just give me 2 days of nice bullish price action, nice close, convincing close above these highs, and then I would be a buyer in that market. So for now, I can't tell if it's going to go down, if it's going to go up. I needed to break this level or possibly break this level for it to go lower. It's kind of in no man's land at this current point. So,
sure, yeah, fair enough. I think with Bitcoin, the momentum, I think it's either, it's moving strongly higher, or it's just silent and just nothing happening. I mean, I just remember for so long, Bitcoin just doing absolutely nothing, and
Yeah.
people just waiting for it to do something forever. And
Mhm.
that was like one of the most, I think, like, hodlers will like still hold through the excitement of like drops, even though it's not fun for them. But I think where people like just abandon ship is just when it just does nothing, when they're just like, okay, this thing is completely irrelevant now. So I think for it to keep going, it's got to break out and keep going sooner rather than later. But we'll see.
Yeah,
Miko,
but it's
you're
not
up. What do
gonna.
you? Sorry, Marco, go ahead.
Oh yeah, I just wanted to add. I don't
Yeah.
think it's gonna stay here forever. I think this is a key level, and in the next couple of weeks, I think this is gonna move up or down. A direction will be picked, because I just don't see it ranging here for a really long time. Right? It just broke the major high, and if I can bet on the volatility, I would definitely place a bet, because I don't think this is gonna be stagnant.
So I've got another stock for you then, Marco. Here you go. You got BITO. I know you don't trade options, but I'm just because you can. I don't do this myself, but you could do what is called. Where's Frank when you need him? Frank knows all about all the options. Option
So I can
thing.
bet on the volatility.
You can
Nice.
straight up bet on the volatility of like
That's cool.
BITO.
That's
So you
cool.
could say like you think it's going to go, either above $33 per share or $26 a share. You're going to think it's going to go below. So you could buy a call for 33 and sell and buy a put for 27. So you can do that sort of thing. It's not really my area of expertise. Options, I do very simple options trading stuff, but just to throw it out there, you could play around with that as well. I think that's actually a pretty smart theory. Like, it's going to go somewhere. So if you know it's likely to go somewhere, you can actually kind of just play that move either direction. But yeah, Miko, what do you think? Bitcoin trending higher? Is it gonna break the highs?
I think there's a good chance it will break the highs. I think we're definitely in that kind of range and struggling to go up on and down, but there is still a very slight bullish structure here. We're still very, very slightly placing those higher highs and higher lows. Again, with not much momentum, so I wouldn't read too much into it. But typically when we do have these sort of patterns here where price finds resistance, but slowly making its way towards that resistance, normally we do expect price to eventually break the high. So I do think there's a good chance Bitcoin will get back to, what is that, 73,800, 74, call it 74K. I do think there's a chance price will get back to that high. What we do past that point really depends on the conviction, the momentum, the volatility, because we could very easily get to that high and then start to sell off again. But I would expect us to go and take out that high. So I'm still bullish on Bitcoin purely because of the technicals, the trend, the market structure. But yeah, it is very choppy, but I do expect us to get 74K again.
Yep, fair enough. Well, thank you guys both for your thoughts on everything here today that I threw at you. And again, big thank you to you also for yesterday helping us out with that stream. Between everybody that rotated in and out yesterday, we had nearly 22,000 people watch that stream, which was like way bigger than our usual one.
Yeah, that's nice.
It was just awesome to have you guys take over, do your segment. I'm sure that a lot of people got to know you in the last 24 hours, which is exciting. So, which is awesome. Because we had a lot of people who watched with you live, and then a ton of people watched back that stream after it went up. So, just really cool stuff. And I hope that we can do it again in the future.
Yeah, I got a lot of new subscribers. I checked out my channel analysis and it like blew up after the stream. So that was really cool. Yeah, thank you. Thank you very much.
Oh no, that's the thing. That is like a mutual benefit to everyone involved. The audience gets a rotation of traders from all over. They get to learn different styles. We all get to experience growth on all channels, which is just exciting. And it's like a big congregation, and I hope we can keep doing it for those big events. So again, thank you guys for contributing to that show, and also for coming in here today. I just want to say also, for those of you guys who are hanging out with us, make sure go subscribe to Miko and to Marco. Both of them have their own YouTube channels here. We've just dropped a link here in the chat with us live. If you're here, just click their links. You can subscribe to their channel for more content. Thank you to both of you guys for coming on the show, and we will see you back next week.
Thank you. See ya.
See you next
See you
week.
guys. All right. Yeah, always good to have those guys on. They did an awesome job yesterday. It was really cool just to have them kind of take over solo, run the ship for a little bit, and give us a break on the back end just for a little bit. We did 6 hours yesterday. If you're just tuning in, not sure what we're talking about, we did a 6-hour stream yesterday, and Miko and Marco both took over for a segment of it. All right, so let's keep going. Some people are asking about the indices in the chat. Is NASDAQ going? Is it going to keep going higher? Is the S&P going to keep going higher? This is an impressive start, I will say. Taking a look at the 1-hour chart, we are breaking through those highs. That being said, I can't give you a strong convicted answer either direction. And I know that's annoying. I know that people are like, just tell me where it's going. But I don't know. The thing is, I never know for certain, and no professional trader knows for certain what the market's going to do. The difference, though, is that I use software to give me a basic understanding of what the fundamentals are looking like, and then I use technicals to enter and exit. So right now, if you're asking me about the indices, right, and go indices and see if we have any bullish or bearish bias, I have no reason to be in a trade on the S&P or the NASDAQ as a momentum-based trade. There's nothing there for me. They're neutral readings. When I take a look at purely the technicals, which is not enough for me to enter trades on, I don't use pure technicals to enter trades. The technicals on the daily chart are choppy and range-bound. I would be a bull if we broke through the highs, right, technically, and I'd be a bear if we broke through the lows technically in the short term, right? So I'm not trying to be frustrating. I know people sometimes ask me about specific charts, give me an opinion, but sometimes I don't have an opinion, and I'm not going to make one up just for the content. So my opinion overall is no opinion. I'm neutral on the NASDAQ and the S&P 500. I've mentioned I would like to see it come down and break through the lows, because then I could probably build some positions on some of my mean reversion based strategies. Or strategy that I use options selling for premium. I'll do a real quick update on some of those positions with you guys here. So let me log into my brokerage. Okay, so I have several puts that I've sold since yesterday. The U.S. stock market is not open for another 10 minutes or so. But overall, I've sold puts on a healthcare ETF, a solar ETF, technology ETF, the S&P 500 ETF at 460 on VOO, which is a ways away. It's like a 5% correction on the S&P, which we're not there. XLY, TLT is not going well for me. I'm dealing with that as a drawdown currently. So I'll show you TLT. Here's my TLT position. So I sold puts at $93 per share. We are currently seeing price at $90.50. What that means is that on expiration day, I might have to, if price is below on expiration day, which is the 26th of April, it might mean that I have to buy shares at $93 per share, even though the price is lower. Doesn't sound very fun, but that's what happens sometimes when you sell options. You have to get assigned eventually, and I actually don't mind it. It means I get to build a position on TLT. I also collected $1.07 in premium. Now, that might not sound very exciting, but what $1.07 means is 1.07 per share. I sold 10 contracts or 1,000 shares. So I made, for writing this put, $1,070 right off the bat. Immediately made $1,070. Now, that being said, I might still have to take or experience a drawdown, because I'm buying shares, if they were assigned to me right now, at $90.47. So I would take an immediate unrealized drawdown position, which may happen. Without getting too complicated, if you want to learn more about my options trading strategy, it's very simple, very straightforward. Disclaimer, it's for more people who have larger accounts. It's not very oriented for small account trading. But if you'd like to learn more about that, you can search up on YouTube, Wheel Strategy Trader Nick. Do you have Instagram? Yes, at Trader Nick FX. So we'll continue to watch that. But yields, if they drop here today, that'd be good for my TLT position. Stock market would probably also like that if yields continue to come down. Why are they down on the day? Well, PPI came in slightly cooler than expected, despite yesterday's hotter than expected CPI. So just a bit of consolidation there. Do you have Snapchat? I do, but not for the public. I don't really use Snapchat very much. Maybe when I was in like high school. US oil still in this trade. Stop loss is trailed on the 4-hour chart just below structure here. Here's the euro, kind of flat on the day. Pound dollar just up slightly. Dollar yen. Dollar Swiss. I am out of dollar Swiss, by the way. I took profits on it. So I took profits on dollar Swiss this morning. So price was moving really well. I trailed my stop. Price came back down, broke support, took me out for my profit there on dollar Swiss. It ended up being about 50 pips in profit. Do you see DXY going up? I am kind of thinking that the dollar index has more room to the upside. That being said, in terms of setups, this is one that I actually do have some conviction. I like the dollar long right now, as long as I can find some technical entries. So I'm looking at the euro, I'm looking at the pound, I'm looking at dollar CAD and dollar yen and dollar Swiss if we can get the setup again. I made some money already on the dollar move. We'll see if we can find another entry on it. So what we see here, if you're wondering, how are we getting these readings? So this is a software tool that we've built here at A1 Trading over the course of the last 2 years. We launched it 2 years ago, and it has become our primary thing we do. We build trading software for people to find better opportunities in the market through fundamental analysis, the commitment of traders data, retail positioning, seasonality, all sorts of good stuff. So what this is doing is it's looking at a collection of key economic data and giving us bullish or bearish readings on various components. So if you're looking at, like, let's say the pound USD. So the pound dollar, when we look at the commitment of traders data, doesn't do us very much justice. It's more bullish towards the pound, but that's only one thing. And a lot of traders will stop there. They're only looking at the commitment of traders data, or they're only looking at retail positioning. What we try and do with the software is we try and bring into consideration lots of different key variables, like GDP numbers, which favor the US, manufacturing PMI numbers, which favor the US. Services PMI is neutral between the two of them, meaning none is really more impressive than the other. Retail sales definitely prefers the US. Retail sales have slowed in the UK. So that would give some more score towards the US. Inflation readings are hot in the US and have been cooling in the UK. Employment change and unemployment rate both favor the US over the UK. Interest rates, finally, do still favor slightly the pound. Okay, so when you look at all of those things in combination, you also have a downward trend. Retail positioning would show you retail traders are long on the pound. All of this combined is what gives us this reading here for the pound USD. So if you'd like to then look at the pound dollar, the idea is like, okay, we have a bearish reading. Then we go look at the chart and say, okay, well, is there any setups here? And what I've been looking for in the pound is a breakout of this support level here on the daily chart. If this level breaks, that's a nice technical signal for me to look for downside. So that's an example of how I might use the software to help me find a trade. The EDGEFINDER spotted all the fundamental data, it pulled it all in here for me, created a watch list for me, and boom, there's a bearish reading. Then I actually look for technical entries, manage my risk, and do all the other trading stuff that everyone knows how to do, right? Everyone knows how to mark up charts and size their positions for the most part. That's relatively easy. Where I think is What I think is more of a challenge for people is fundamentals are very hard to approach if you don't know what to look for, if you don't know where to find that data. So instead, we built a tool that consolidates it into one place. All that to say, just a reminder, we are currently doing a 45% off discount on the EDGEFINDER. If you'd like a copy, we're dropping a link here in the chat right now. If you click this link, it will take you to a support chat where you can speak with someone on our team about getting a copy for our 2-year celebration sale. This is the biggest discount that we do all year long, so don't miss out. If you've been thinking about getting a copy, take advantage, click that link, chat with a rep, and you can get yourself set up with that discount while it lasts. Again, that's 45% off of our tools. This gets you everything from the commitment of traders data to our market scanning software tools. So you can look at fundamental data in detail. You can look at crowd sentiment. You can look at commitment of traders data, right? You have all of it here in one platform. So if you're a serious trader looking to up your fundamental game, take advantage of this offer. It is the biggest one of the entire year. So click that link, chat with a rep, and there you go. That's going to wrap up the show here today, guys. We did an hour. I know it's a lot shorter than yesterday's 6-hour stream, but I've got other things I got to move on to today. Yesterday, when we do 6-hour streams, I end up getting behind on all the other things that I have to do just behind the scenes running the business. So I'll try and keep it a little shorter today, but I promise you we'll have more 6-hour streams in the future. We had so much fun. It was so cool just to see all of our different guests take over the show, and the audience was super involved. We hit 1,100 likes on yesterday's stream and 22,000 views, which is remarkable. So thank you to everybody who hung out with us yesterday. We had a blast, both me and my team. We had a lot of fun doing it. It was just cool to see. So thank you for being there, and thank you for being here today. With that said, have a great rest of your trading day. Be safe, and we will see you back on the next one. See you guys. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Don't go anywhere.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the EDGEFINDER for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.